Now let's go back to another question. It comes from this direction over here. Go ahead.
What does it mean when a bank says it can't modify a loan because the investors won't allow it?
Alfred.
When a servicer says that we can't modify the loan because the investor won't allow it, what they're saying is that even though they service the loan, there are other investors who actually own the mortgage or own the paper. Those investors, through different mechanisms, sometimes legitimate and sometimes not so legitimate, have policies that indicate that they will not modify loans that don't meet a certain criteria. So the investor may say that if this loan is 85 or 90% of if the value of the property is 85 or 90% of the balance, we will not modify. We would much rather move towards foreclosure because it's more profitable for the investor. That's what that means.
And the thing to remember, I think, though, is that really that's a losing proposition for the lender. I mean, they may not have realized it yet, I think, as an industry, but especially in the Miami Valley area, refusing to modify a loan doesn't make good business sense, not for anyone involved in the transaction. And so, again, you stay in the home, and as Susan mentioned, sometimes the banks will realize the error of their ways. Sometimes they'll agree to a modification eventually, or they'll walk away from the property. And in any event, perseverance is, I think, key.
And I was just going to mention there's a new federal law that was recently signed that basically gives servicers something called a safe harbor. So I don't think that argument is as tangible now.
Usually when a bank says that, that's their first conversation. You persevere. You stay in there and you make up your mind that this is your home and you intend to do battle for it, they will change their mind.